Good morning, it's Harvey Jackson. So there's no timeline from Trump's address to give an idea when the Israel-Iran war is going to end here. So that's not good news for the oil markets, but commodities are higher. The U.S. dollar's higher, Canadian dollar's lower. Yeah, economies of the world are just going to be in some pain here. So some of the quotes here that he has, the strait would open naturally. So he still didn't make any more comments about NATO, as far as I heard anyway, during his speech, but he did before the speech that they should be defending the strait because they don't get any oil from there, and they don't intend to getting any oil from there. So he's defending it for them, for a lot of these other countries. So stocks fell, dollar firmed, oil rose shortly after Trump's address, and then he says he's going to hit them hard. So hopes dim for swift end of the war. So oil prices just surge, and you can see that just on this chart, and I'll show it again here in a bit. But the other part of it here is gas prices just keep on rising here as well. And since the war, you've actually had crude oil for the Western Canadian Select actually take a pretty good run here as well. So above that $80 mark for the Western Canadian Select, I believe it puts monies into the Alberta coffers, there's for sure. Factory input costs soar worldwide. Iran snarls up supply chains as the war continues. Bank of Canada notes came out yesterday, and there's some just issues with they're looking forward, and there could be some more rate increases as we go forward here, just for the fact that economy's not doing all that well. The PMI came out, and it was a drop yesterday as well. Another article is the mustard. Some are looking for to get GMO mustard, so genetically modified mustard, but half of the mustard supplies from Canada actually go to France, and they're non-GMO status. We don't want to wreck the whole market just for that, I wouldn't think. But there's going to be others with the opinion that it should be. Cold for Monday. It looks like we're going to get into the freezing. I showed that yesterday as well. And long range forecast looks like there's going to be adding some moisture in this area, but we'll have to see how that's going to play out for sure. Like that takes us all the way up for 2 weeks here, and enough moisture there, but there's a deficit here for sure, and that would be the other area that got to start paying attention to. Here's just the weather as it rolls out for part of the weekend. It just keeps on going here, adding moisture. Drought though is still, and it's pretty severe over here. We'll see how that plays out. There's going to be the drought indicator will come out, but this is just a soil moisture map from NASA. Quick look at the markets here. Canola is up $9 on the front month, so $7.27. November is up $8.10 at $7.33. Soybean oil is up a whole penny at $68.20. Palm oil is up 28 ringgits at 4,754. Crude oil is up $8 when I took the snapshot. They were almost the same, West Texas and Brent. Diesel fuel up 36 cents a gallon at 407. Soybeans up 4 cents at 11.72. Spring wheat up 4 3/4 cents at 6.46. And the other wheats are up 7 and 9 respectively. Corn is up 3.5, and the Canadian dollar is back down right at the $72 mark. So just a quick look at it. We did actually breach our trend line, but now we're picking our head above it now, and we're above the short-term moving averages here as well. Same thing for the November peaking above the short-term moving averages. Did not get that close to the trend line on the way up. So it's still, you can see that it is moving sideways, but it's not reaching the trend line up. You would still say there's an overall trend line even on the rapeseed. Soy oil still very respecting that trend line for sure. The soybean futures, not so much. It's just tracking sideways. And here's the Darren Fesser.
Beans here. We do have a potential bear flag pattern within a rising wedge pattern. Both of these are bearish. What does that mean? Usually how this pattern pans out, we see a drop in price. I would watch this 1135 to 1157 area very closely. That is a decision point here. Anything below 1135, you open a can of worms back towards these higher volume levels, way below $11. Call it right around that 1080 level.
Yeah. So the rising wedge and bear flag actually is kind of pointing soybeans down, but when you look at the new crop, it's not quite as evident, right? So palm oil is the leader in the oil or the veg oil complex, and it's higher. But when you look at the crude oil here, even it's other than that candle that happened over a weekend there, now we're trading above the 108. Still looks like a trend that we could be still not forgiving. It looks like it's going to punish us some more as the market keeps going up here. The Brent is not trading as high as the West Texas, and I've had a couple of clients ask me, and I think it might be just because there's a lot of demand. Because it's a safe place to pull oil from. You can pull in there and get oil, and you don't have to worry about any traffic. The insurance is probably lower, so net, it's probably a very good place to come get oil. Is come get oil from North America. This is the ugly chart again. You got $4.48 your May heating oil or diesel fuel futures, and if we close up here, we're making a higher high. Ugly. Canadian dollar. We seem to be trading the same way as the S&P and the rest of the market. We are not trading like we are an oil complex at all. Almost the opposite. Maybe it's because we've got all our oil kind of. It's a captive market to the U.S., and very little going outside of that. We are not a oil superpower because we're not selling to anybody else. U.S. dollar index, so that jump right at the $100 index right now, and that's not a good sign for the high-priced products that they have here. Gold still looks like a short-term leg up here. So this is what I was talking about. This looks like the Canadian dollar almost moved down. Quick look at wheat here. Big candle down, half or a third of the candle move back here. So that is a good sign. Still looks like we're supported on the way up here. So we have to break out above that 661 area for it to be bullish, to beat some highs that are farther back there for sure. Here's your wheat as well on your in your Kansas and your Chicago. All got some uptrend here, but I think I got Darren Fesser talking about the wheat a little bit here as well. Corn futures, this is broke that trend, and now we've got this situation here where that could open up some more downside as well.
A lot more. Pretty much the rest of the year on new crop corn here. There's a strategy I do like. If you're not 40%, hey, you don't like the prices, you need this market to come to you. I like selling the September short dated 550 calls at 10, 15, 20 cents. Again, I think that you're going to have to get this market to come to you. And the volatility in that is at very, very high to right now, where I don't know if that's going to maintain itself unless we start seeing some really significant increases in the price. Maybe we do, maybe driven by oil, maybe driven by weather. But at the end of the day, December corn 484. That's going to be the line in the sand here. That is also a target. If you have not hit that target yet or put that target order in, that is a 10% target order. Sadly, I mean, this is going to be Chicago week, but it's the same thing on the KC. The Western Kansas not getting a whole lot of rain. Bullish momentum remains here. You have not got two consecutive closes below that 20-day EMA yet. Watch this decision area between 609 and 620. Again, as we've mentioned, anything above 620, we think that this market could push towards 650. That would leeway for some higher corn prices. Hey, that's all I.
So quick look at the market, the beef markets here. So we got a nice increase for the last short while here, and we are above that pivot point. If we get back to there, I would be very happy about maybe defending more for your fall prices, you name it, for your feeder cattle and your feeders as well. Just because you're trying to make a higher high here on both the feeder cattle and the live on the short term. And that's all I have for you today.